Let's now move back to the markets over here in Nigeria. The NSE All Share Index is down a fraction today. Baba Ibrahim, Managing Director at Mainstreet Bank Securities, is standing by at the Nigerian Stock Exchange to give us some perspective on the market. Baba, clearly earnings is something that investors continue to look at, and they've been mixed recently. Today we've been examining the numbers from Guinness Nigeria, and I think we should start from there. Your thoughts on the numbers from Guinness, because many will say this is more bad news from Guinness. It seems like they continue to struggle to improve the bottom line.
Yes, I think quite clearly it's not really surprising that we're having this kind of performance from Guinness Nigerian PLC. Well, what the issues are basically is the fact that we've seen operating costs rising well over 20%, particularly in areas of finance costs. I think that to my mind, it's really not easy operating on that basis. By the time we are seeing improved power supply, we should be able to see this company bounce back remarkably well. But however, I think that the drop in results or bottom line is not so negative as to give cause for worry. But ultimately, we should see the company posting good dividends come June ending.
So, Baba, what do we do with this stock? They continue to struggle to improve the bottom line. Do we dump Guinness at the moment because the share price is still well over 100 naira right now?
I don't think the best strategy right now is to dump the shares. Don't forget the fact that only last week we saw some corporate realignment in the company. I think that will translate to improved performance going the Q4 space. The share price is pretty low at 150, 160. Guinness did do as high as 270, 260 as the last year. I think it's a stock to watch out. It's a stock to look out for, and the fundamentals should improve as we go down the Q4 space.
All right, staying in the brewery segment, one brewer that is doing better but still struggling, if you like, to improve the bottom line is Nigerian Breweries. PBT was down about 2%, so not significant improvement there. Your take on Nigerian Breweries, is it the best choice in the sector? Do you overweight Nigerian Breweries in that space?
Yeah, I think what's likely going to happen is the fact that most investors are actually seeing the fact that the incoming government probably could begin to improve on infrastructures. That will translate to remarkable climates for doing business. And all things being equal, we should see the conglomerates and the food and beverage sector outperforming most other sectors. Right now, the share price of Nigerian breweries is a bit low at 150. Averagely, their payout is pretty remarkable. We should see, a good comeback on Nigerian brewery shares, given the fact that they actually posted a reasonable marginal, improvement on their bottom line. And don't forget the fact that most of these companies have had to, operate in a very tough, operating environment. That accounts for why the result is really not so remarkable.
Yeah, I think many will certainly agree that it's a tough environment, especially this year, given the impact of the elections. Okay, but if we have to choose, right? If you're going to invest in this market, you want to track the index. Do you buy Nigerian breweries? Do you buy Guinness? What's your pick?
Yes, I should buy Nigerian breweries. I should buy Guinness. But above all, I should be able to beat my searchlight on PZs. At 30 naira, below 30, pretty good buy. Unilever, its current market price of about 39 and a fraction is pretty, a good buy relative to the fact that Unilever overseas is actually doing a buyout of its Nigerian wing in terms of their shareholding. I think all things being equal, we should see a push-up in the share price of Unilever. The same goes for Cadbury. Cadbury is actually experiencing a reasonable pull-up. Don't forget the fact that I paid 40 kobo, even though a lot of investors does not seem the share price to be too good in terms of the dividend payout. But you're buying into the future, you're not buying 4 times a month, 2 months, 3 months. You're buying into 6 months, 1 year, 2 year time horizon. I think if you do that, you probably will rebound fully in terms of your internal investments.
You've certainly focused on the non-banking companies, but as we continue to go deeper into this earnings season, what's your take on the banking sector and the numbers we've seen? UBA, I think, is an interesting case study. They held their AGM today. Your thoughts on UBA and the broader banking sector? Which stocks are interesting, exciting for you in this space?
For me, in terms of the fundamentals, current positioning of what they are doing, UBA seems to be a stock you need to watch out for. Relative to its peers, their Q1 posting of about 17 billion it's pretty remarkable relative to what Zenith Bank did, what GT Bank did. I think that UBA is a really stock to watch out for. Don't forget the fact that when the full year result of UBA came out, UBA came out in 2015, the share price rose as low as 3 naira 62 kobo. As we speak, even though it's on offer at 35, 540, I think it's pretty still a good buy. Yeah, FCMB too are actually doing a very aggressive repositioning in their brand, in their and their customer service delivery as well as their marketing. FCMB will really go very high, down the line. Don't forget the fact that Transcorp, the market is actually waiting Transcorp Q1 results. That should tickle the market, all things being equal.
All right, Baba, let's leave it there. Enjoy your weekend. Baba Ibrahim, Managing Director, Mainstreet Bank Security.